Welcome to G Fun Facts Online, the show that dives deep into the fascinating stories shaping our world. Today, we're talking about something most of us can relate to, and frankly, something most of us dread: taxes. But we're going to a place where, for decades, a certain kind of tax was the stuff of legend, a myth, something that simply didn't exist. Imagine a world where your entire salary, every single dollar, cent, or dirham, goes directly into your pocket. No deductions for income tax. For a long time, this wasn't a dream. It was the reality in the oil-rich states of the Persian Gulf. It was the bedrock of their social contract and a super-powered magnet for attracting the best and brightest minds from all over the world. But now, the unthinkable is happening. The ground is literally breaking on this tax-free paradise. A seismic shift is underway, and it's starting in the Sultanate of Oman. Get ready, because today we're exploring how the Gulf's tax-free era is coming to an end, what it means for the millions of people who live there, and whether this is just the first domino to fall in a region-wide transformation. In a move that has sent ripples across the entire Gulf Cooperation Council, or GCC, Oman has announced it will become the first nation in the bloc to introduce a personal income tax. This isn't a rumor, it's a historic decree set to take effect from 2028. So what exactly is the plan? Oman is proposing a 5% personal income tax, but here's the crucial detail: it's only for high earners. This isn't a blanket tax hitting every single resident. The government has been very specific. This tax will only apply to individuals with an annual income that exceeds 42,000 Omani rials. Now, for most of us, that number doesn't mean much, so let's translate it. That's roughly $109,000 a year. The Omani government estimates that this will only affect the top 1% of earners in the country. This decision is a central piece of a much larger puzzle called Oman's Vision 2040. Think of it as a national New Year's resolution, but on a massive, decades-long scale. The primary goal of Vision 2040 is to future-proof Oman's economy. For decades, the country has been riding the waves of the oil and gas market. When prices are high, the country flourishes, but when they drop, it creates huge economic vulnerability. In some years, these sectors have accounted for a staggering 85% of the nation's entire public income. Relying on one single volatile commodity is like building your entire house on a foundation that can shake at any moment. So Oman is strategically diversifying, building new pillars for its economy, and this income tax is one of the most important new pillars. Now, you might be thinking, even if it's just for the rich, a new tax is a new tax. But the Omani government seems to have thought this through very carefully. They've built in a series of deductions and exemptions to soften the blow. Things like education expenses, healthcare costs, inheritance, and even the cost of your primary home will have allowances. This isn't just a blind cash grab. It's a structured attempt to create a new, stable revenue stream for the government without crippling the financial well-being of the low and middle-income residents who are the backbone of the country. So the big question is, why now? Why, after all these decades of tax-free living, is the dam finally breaking? The truth is, this isn't a sudden decision. It's a calculated response to a changing world. The golden age of endlessly high oil prices, the very fuel that powered the Gulf's rapid development, incredible infrastructure projects, and generous welfare states, is becoming more and more uncertain. The constant fluctuations in the global energy market have been a major wake-up call for the entire region. It's exposed the Achilles heel of any economy that's too dependent on a single source of income. This has triggered a much broader push for what economists call fiscal reform across the entire GCC. It's not just Oman. In recent years, we've seen Gulf states break other major tax taboos. For example, several countries have introduced a value-added tax, or VAT. Saudi Arabia has a VAT of 15%, while the UAE, Bahrain, and Oman itself have a 5% rate. The UAE also made waves when it introduced a 9% corporate tax on business profits starting from June 2023. These moves, along with Oman's new income tax, are all part of a grand strategy. A strategic pivot towards building economies that are more resilient, more diversified, and ultimately more sustainable in the long run. Even major global bodies like the International Monetary Fund, the IMF, have been encouraging these reforms, arguing that new taxes are essential for the long-term financial health of the region. Oman, specifically, has been particularly proactive. Back in 2020, the country launched a medium-term fiscal program designed to get its public debt under control. At its peak that same year, the country's debt had ballooned to almost 70% of its GDP. That's a huge number, but through careful reforms, they've already managed to bring that ratio down significantly. The introduction of a personal income tax is simply the next logical step on that journey. It's about securing a stable financial future that isn't tied to the whims of the oil market. While Oman is the first to officially cross the personal income tax Rubicon, let's take a quick tour of the neighborhood to see where everyone else stands. Let's start with the United Arab Emirates, home to the glittering city of Dubai. The UAE currently has no personal income tax. This remains one of its biggest selling points, a powerful lure for expatriates and professionals from all over the globe. However, the winds of change are blowing here too. As we mentioned, a federal corporate tax is now in place, and this is interesting for individuals who might think they're completely off the hook. If you conduct a business or a business activity in the UAE, even as an individual, and your turnover crosses 1 million dirhams, you could be subject to that 9% corporate tax. So, while your salary is safe for now, the tax landscape is definitely becoming more complex. Now let's jump over to its neighbor, the Kingdom of Saudi Arabia, the region's largest economy. Like the UAE, Saudi Arabia does not impose a personal income tax on salaries for either residents or non-residents. The country's tax system is primarily focused on a 20% corporate tax for foreign-owned businesses, a religious levy known as zakat for Saudi-owned businesses, and various withholding taxes on payments made to non-residents. Late last year, Saudi Arabia's tax authority did release a draft income tax law for public consultation, which caused quite a stir. However, a closer look revealed that this was aimed at modernizing the existing system for businesses and bringing it in line with international standards. It wasn't about introducing a personal income tax on individuals, but the very fact that they are reviewing and updating their tax laws shows that fiscal reform is a top priority. So we have Oman taking the plunge, while the UAE and Saudi Arabia hold the line for now. This brings us to the million-dollar question, or perhaps the $109,000 question in this case. Will Oman's bold move create a domino effect across the rest of the Gulf? This is a really tricky one. For decades, the lack of personal income tax hasn't just been an economic policy. It's been a core part of the region's identity and its competitive advantage. It's a fundamental part of that social contract we talked about earlier, where citizens and residents have traditionally enjoyed subsidized living, cheap fuel, and other benefits in an unspoken agreement in lieu of direct taxation. Changing that is a massive deal. You can bet that officials in Riyadh and Abu Dhabi are going to be watching Oman's experiment with a microscope. If Oman successfully implements this tax, strengthens its finances, and does so without causing a mass exodus of talent and investment, it could create a powerful template for others to follow. A successful test case could embolden other Gulf nations to say, okay, it can be done. However, everyone is proceeding with extreme caution. Both Saudi Arabia and the UAE have been quick to publicly state that they have no current plans to introduce a personal income tax. But listen closely to that language. No current plans. That leaves the door open for the future. The challenge for any Gulf state thinking about this is to strike an incredibly delicate balance. How do you diversify your revenue and build a more stable economy, while at the same time preserving the economic dynamism and competitiveness that has made you so successful in the first place? It's a high-stakes balancing act. This is why Oman's model is so interesting. By starting with a relatively low rate of 5% and applying it only to a very high income threshold, They are essentially testing the waters. It's a way to introduce the concept of income tax without causing a major shock to the system. It allows them to build the administrative infrastructure, gauge the public and corporate reaction, and adjust their strategy as they go. This cautious, phased approach might be the most likely path for any other Gulf state that decides to follow. So what does this all mean as we look to the road ahead? The introduction of personal income tax in the Gulf, beginning with Oman, is more than just a change in financial policy. It marks a profound shift in the entire region's economic philosophy. It signals a transition away from the old models of petrostate wealth towards a new era of greater fiscal maturity. It's a clear recognition that the economic strategies that worked wonders in the 20th century might not be enough to guarantee prosperity in the 21st. The tax-free allure of the Gulf, that powerful magnet that drew in millions, may be starting to fade just a little. But in its place, a new vision is emerging. A vision of a more sustainable, a more resilient, and a more diversified economic future. The coming years will be absolutely crucial. We will see how this new paradigm takes shape, how it impacts the lives of the people who call the Gulf home, and whether the rest of the region will join Oman on this truly transformative journey. That's all the time we have for today on G Fun Facts Online. Thanks for tuning in as we unpack the end of an era and the beginning of a new one in the Gulf. Join us next time for another deep dive into the stories that are reshaping our planet.